Oh, no. We are not done just yet. We got one more day left this week and a big non-farm Friday coming around the corner tomorrow morning. It's Thursday evening. Hope you had a fantastic day out there. We're back to work tonight, getting ready for non-farm Friday. We got a bunch to talk about tonight on a very important video newsletter. A lot of ranges on the charts, very common ahead of a big news number tomorrow. So lots of ranges. You know me, I love range-bound markets. And as always, I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money tomorrow morning. Before we jump in and get this party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you enjoy the video tonight, if you tune in every evening, do me a favor, hit that like button for me. I appreciate you guys tuning in tonight and supporting the YouTube channel. But enough of the intro, right? Let's get ready for Friday, non-farm Friday. Got a bunch of ranges on the charts. Love me some range-bound markets. Everything's bearish right now. Oil bearish, Nasdaq bearish, S&P, of course, bearish. And again, there must be a big news event coming tomorrow because it's all coiled up inside trading ranges right now. We're looking to short the pops right now, short the breakouts tomorrow, and got a lot of great trades we're going to dive into here tonight. Now, speaking of tomorrow, though, let's all get on the same page here because tomorrow it's not your average Friday. Tomorrow definitely has a bunch of big news here for us. As we always do, the first Friday of every 1 month, we have one of the biggest news reports of the month, right? And then, of course, is the employment situation, which is pretty much well known as the non-farm payroll number. Now, we heard from the ADP employment number this morning at 8:15. That was a pretty strong number, almost double the amount they were expecting. So we're definitely expecting to see a relatively big number tomorrow, relatively decent number for December's non-farm payrolls. That will definitely be a big question mark, and one of the things I always tell us before these non-farm Fridays is be careful overnight. A lot of times markets are pretty slow in the overnight session leading into these big news numbers. Remember, being a trader is like riding a bicycle. It's a lot easier when it's moving consistently. So if it's not moving well overnight, don't force it. Everyone's waiting for that number. Hopefully it will move well overnight, especially if you're in Asia or if you're in Europe. But if it's slow, if it's sluggish, just be aware of the situation. Everyone's waiting for that number to come out tomorrow. In most cases, by about 9:15, going to the 9:30 open, the markets calm down after that employment number comes out, and we can start looking at the charts again and looking for some trades tomorrow morning in the trade room. We also have another big news report, that ISM Services Index. We saw that ISM Manufacturing Index completely tear the market up on Wednesday. Now, the ISM Services is definitely not as volatile and potent as the manufacturing number, but I would imagine if I had to guess for tomorrow with that employment number at 8:30 and then ISM at 10 o'clock, I would probably guess the best trades tomorrow could be right after that 10 o'clock number. So between 10:10 and 11:15 or so on a Friday morning. I would definitely make sure you don't miss that block between 10 o'clock and 11 o'clock tomorrow morning. Now, of course, last night we talked about Fed speakers, right? Got a bunch of Fed speakers, like a whole buffet of Fed speakers here for tomorrow. I don't think the Fed speakers are going to move the markets tomorrow as much as we thought, as much as they move the markets here today. And I say that because, we basically at this point now, the FOMC, the Fed speakers, they're all saying the same thing. Higher rates, longer than we thought they were going to be. They're going to throw the kitchen sink at this thing to kill this inflation. We heard from the FOMC minutes on Wednesday. We heard basically they're all saying the same thing right now. So I don't think you're going to see any surprises out of those Fed speakers for tomorrow. And even if somebody breaks ranks, I just don't think. I think the market's going to understand that now. We're anticipating more rate hikes, even if it sends even if it kills the economy in the process, right? So I don't think the Fed speaker is going to be the big catalyst here, at least until something changes out there going into the rest of this month. So keep the employment number on your radar. Again, careful overnight. Be aware of that whippiness that comes around that employment number, and watch that 10 o'clock. We call it the 10 o'clock shock in our trade room. If I had to guess tomorrow, that 10 o'clock to 11 o'clock block, I would think where you'll get kind of that, the calming down of the markets and really start getting some good trades to finish up the week. So keep that stuff stuff on your radar for tomorrow. And don't forget, we're going to come back and we'll trade the stuff tomorrow morning in our trade room. Back to our charts though, right? Because, the news is great. The news is a great catalyst, but the money is made by trading off the charts. Now, I'm going to go over all my favorite trades on each of these markets here tonight. So if you're serious about making money on your account, make sure you watch all the way to the end because you'll learn something new throughout each step of the video here tonight. And I do try to save the best stuff all the way to the end, so I'll give you a reason to stick around all the way to the finish. Let's go Emini, let's go Nasdaq, and we'll finish up on the black gold, the crude oil futures here in tonight's video. Now, real quickly, all of these are tick charts. You can see all the time frames in the upper left-hand corner, so be aware of that. And also keep in mind, too, the S&P and the Nasdaq are very, very similar, right? So a lot of we talk about tonight on the S&P can be applied to the Nasdaq and vice versa. So kind of keep that in the back of your mind as we're going over this. There are a lot of key insights on the chart right now. We get a long-term bear bias. Not much is new there, right? Look at a 60-minute chart. We're very bearish, and that will definitely be the lens that will look at this here tonight. We basically have a bear market into a trading range right now. That's the key component, right? That's the most important clue as we go into tomorrow. Anytime we have a bear market into a range, there's two basic trades we look for. One is to short the bounces back down into that trading range because ranges act like magnets, or short the breakouts. Now, as we talked about pretty much throughout the entire video last night, remember, when it comes to range breakouts, we have to get proof. And so we'll talk about what breakouts will look like here and how to keep yourself out of trouble for some fake out breakouts. I also can see this large bear channel. If I zoom out a bit on this chart right now, you can see I'm drawing this larger bear channel. Boy, I'll tell you, if there is a trading god looking down on us right now, please give me that nice big pop up into that resistance for that nice short back down. That'd be my kind of dream trade for tomorrow. So we'll see what we get, right? But I like that bear channel here. The two best trades for tomorrow, and obviously we'll see what we get, right? We'll take whatever the market gives us for tomorrow. The two best trades for tomorrow is as it goes up, buyer failures back down into that trading range, and if it goes lower, looking for some big bear breakouts on strength going lower here. We've got some key levels waiting down below us, 88, 83 even, before we really crack this thing wide open down to that 37 level. So knowing that information right now, how do we make money with this? There are kind of three basic tactics I want you to keep in mind. What I'd love to do is, again, if somebody's listening up there right now, I'd love to get this in a pop-up, get a nice deep pullback. Now, deep pullbacks are great because they give you a great risk-reward ratio, but you pay a price to those, right? There's a cost to that deep pullback, and what's the cost? The cost is momentum. It is. And so with that deep pullback now, remember, anytime we have a strong move in one direction, we have to anticipate this market's going to want to pull back and retest that high, right? Anytime we see a strong move down, for example, we expect a retest of that low, right? This is the way markets move. This is the way momentum works. So if we can get that deep pullback, it's great, but we have to expect those buyers are going to come in and try to rip this thing for another leg higher. So what we do is we want to basically let those buyers commit. I don't try to pick a top. I let the buyers kind of show me what they want to do first, right? So let them try a couple times. I like to use the 2-try rule on this. And my favorite trades on these are simply waiting for the buyers to try a couple times these highs. Think about now where their stops are. If you're a buyer and you get caught chasing this thing up into resistance, when your stops get hit, it's an easy way to make money for short sellers because the buyers are trapped. And ultimately, when those buyers fail up there, you've got sellers who are selling high, and you now also have buyers that are also sellers as well. So I really like that, what I call a 2-try failure off of that high. And then one of my favorite follow-up trades on this is as it starts to roll lower, we know that range is kind of the objective, right? So as it starts going lower, draw a trend line off those lows, I draw my channels backwards, right? Trend off the low, find a channel off that high, and then we'll do is we'll drill down to our faster time frame. We're not trading off an 8,000 tick chart. We'll drill down to our faster time frame. What I'll do is I'll look for any of the entry patterns that you guys are learning, right, in that free trading course. This could be a bull trap, like I'm illustrating right here. It could be a buyer failure, right, like I'm talking about over here. It could be a pullback combination, a strength move as we go lower. But that's the good stuff right there, right? I'd love to get us to go up and then, of course, tumble back down again. Now, be aware, right? We may end up going up, pulling back to that moving average, 21 moving average, retesting that high, right? Remember, because that's what they're going to want to do. They're going to want to retest it. If that happens, same thing, right? Same thing. Trap in those buyers, let them wrap that noose right around their neck, right? And once you've got them trapped, we can sell right into those stops with that 2-try failure pattern, as you guys learn in the free classes. And of course, as we go lower, we can grab that new channel. And then remember, first test is always the best test for the short off those highs. And obviously, I'm keeping it simple here tonight, right? To keep the video short. Looking for bull traps, buyer failures, all the same entry setups you guys learn in that free trading course. Which reminds me, we've talked about the free class here a few times now. I know that most of you guys and gals have taken the free classes. I know because you guys send me so many great screenshots of all the money you're making, the winning trades you guys are taking. Those are so inspiring. Keep them coming. But listen, if you're here for the first time, if you haven't taken that free trading course yet, what I'll do is I'll put a little link up here for you in the upper right hand corner. Grab that link, take my free trading course, because the strategy that you'll learn in that free trading course will show you a stupidly simple trick to know where the best trades, the winners will be each day. And I'll make it really easy for you to start making money with that free class by teaching 4 different entry patterns. If you're tired of missing the best trades each day, if you're not getting the results you want, grab that link, take the free course. It's perfect for someone trying to make the jump into full-time trading. Another trick you'll learn in this free course is, let's say, for example, 2 more variations, and then we'll talk about going lower here. As the market goes higher, sometimes when these bear markets, there's such a strong bear market right now, we oftentimes get these V-tops where there's so many bears up there. Again, I'm not a big fan of picking tops like that, right? It would be nice in a perfect world to know exactly where the top would be, but sometimes it keeps on going, right? But listen, if it V-tops, right, these can be frustrating. We don't get the 1, 2 to trap in the buyers, right? Sometimes it V-tops off this and it begins to grind down. These are really simple. If it V-tops and grinds down, just do this. Find a trend line off that low, put it up at that big high, right? See how I draw these backwards, right? We call these hidden channels in our trade room, and then go out and mark off some prior swings. What you want is, you want the first test off the high of that channel, and I like traps, right? Traps will be above a prior swing, but we oftentimes will go just above the 21 moving average. The buyers will come in, they'll try to buy that pullback and keep it going. At this point, though, that V-top confirms that shift in momentum. The range is the magnet down here, and we can use those stops for fuel to run it lower, right? So bull trap or trap high, buyer failure, whichever entry pattern we get. And again, the patterns you guys are learning in the free course. So I like that one as well. Now, let's talk about one more variation of this, and then we'll talk about as the market goes lower, because that's definitely something that may definitely be on our radar for tomorrow as well. One more thing here. If we don't get that deep pullback, right? We may not. It's a very bear market right now. It's a range-bound market, levels of resistance overhead. We may not get that kind of dream scenario where we go all the way up the ladder here. All we might get is a relatively shallow pullback. Now, we talked about the challenge, right? It's great to get a deep pullback because it gives you what? It gives you a good risk-reward ratio. That's why we love deep pullbacks. So a shallow pullback is not going to give us that good risk reward, right? It's not going to allow us to get that big juicy profit target to make the risk of the trade worth it, unless you use a trap entry, okay? Whenever we have a shallow pullback, we have to worry about selling low. And we want to make sure we look for one of these. Let those buyers try once, let them try twice, and then repeat after me. Bull trap, right? Trap high, gotcha, off that high. These are one of my favorites. These oftentimes have some variations of them, right? Shallow pullback, we go up, buyers once, buyers twice, right? There's that trap and back down again, right? So just be aware of that. So we may not get that really deep pullback. If we all we get is a shallow pullback here right now, watch that little trap high. Nice, easy way to pick that entry at the highest possible price, because then what happens? Now you've got a pretty good risk-reward ratio, whereas if you just went in and tried to sell, right? If you just went in and sold down here, now you're, right? If you're getting in down here, right? See that? Now your risk-reward ratio isn't as good. That's why traps are so valuable. And again, if you ask me, traps are my favorite entries because they're so useful. And you'll learn more about those, of course, in the free trading course. Now, the next question is, right? The next kind of setup right now is to short the breakouts. We talked about shorting the buyer failures. Now let's talk about shorting the breakouts. And to do that, why don't we go take a look at the Nasdaq? The Nasdaq, of course, is very, very similar here to the S&P 500. They're almost identical. We have a long-term bear bias right here on the NQ, same thing as the S&P. We get a bear market into a trading range, right? Ranges are magnets. And what do we do with a bear market into a trading range? We find levels of resistance overhead. We wait for the pop up, shallow pullback trap. We wait for that deep pullback trap in the buyers. All right, you get this, right? I don't want to repeat myself too much on this, but that's kind of the same basic idea, right? Or we pop up, V-top, and back down again. And keep in mind, tomorrow's non-farm Friday. There's always a chance we pop up and the buyers hold the pullback and rip it higher. Unfortunately, I can't teach everything in these YouTube videos, but that's why we have a trade room every morning at 8 o'clock Eastern time because, the markets give us different curveballs here and there. But now you know my favorite trades here for tomorrow. And, if things are different, things change tomorrow morning on the fly, we'll be there in the trade room to make sure we know how to trade them if we do get that reversal. Next up, on the Nasdaq, how do we trade this thing as we go lower? Okay, this is where things get a little more tricky, right? Because we're definitely bearish, but just like on the S&P, we have quite a bit of support down here, right? You can see, and again, this is not just the Nasdaq here. We have quite a bit of support down there, right? So the S&P has support below us. The Nasdaq has support below us. The good news is, if they can crack underneath these key levels of support, we now have some nice blue skies, or I guess green grass below, whatever metaphor you want to use for that. We get a lot of open space though. That 10,596 level is a really good level for an objective here for tomorrow. That's a lot of ways to make money. Just kind of thinking about it right now. There's a lot of ways to make money as we go lower. The first thing I would kind of think about is with all of this support going lower, think about this now. We want to get a breakout and really push through these areas of support. But imagine now we break out going lower and we don't quite really crush it going lower. We break out and begin to pull back now. At this point now, I think the best way to trade this will be, let's get rid of this big channel for a moment. Let's say now, for example, we push that market lower, but we get hung up right on that support level. What you can do is, remember, draw your channels backwards. I can draw it off the low. I can now pin it up around the high. Are you kind of smelling what I'm cooking over here, right? And now short the bounce, right? Short the bounce. Markets love to use the underbelly of a trading range. You really can't find a better spot than right there. So think about this now. We break down. We might not break and really roll lower, right? Which we love to get. Now we can go out, find that new kind of hidden channel here. And then remember, in this situation, when you get that pullback right now, what's going to happen? Buyers are going to come in here and they're going to see that range. They're going to see that support and they're going to try to buy it. Now, remember, we have a bear bias, and that's the lens that we're looking at this through here this evening and until something changes, right, for the most part now. So as we go lower now, That gives me a new channel. What I want to do is wait for those buyers now to come in. Remember, this range is a magnet. So anticipate these buyers now coming in, trying to run it higher. And once they dig their own grave, once they commit to it now, again, I'm not in the business of picking tops on these. Let the buyers in this case show you what they want to do, right? They might rip it going higher, right? We'll talk about that in a moment here in a second. But if they do try twice, all their stops now are sitting right below that low. Buyers get stopped out. They become sellers. Sellers are trying to short the underbelly, kind of a breakout pullback of that range. So that's kind of my goal here for tomorrow. If it breaks out lower, but doesn't really break out and crush it, right, going lower, I'd love to get that buyer failure into that pullback combination. You'll learn a lot about buyer failures, pullback combos in the free trading course. And as you can imagine, right, the goal of this would be to go back to retest that low and definitely leave a runner on that down to the low of that channel as well. Does that make sense? What do you think about that? Am I crazy to want to short that breakout pullback into support? I'd love to know your feedback. Give me a comment in the comment section. Let me know what you think about this because I'm a trader, right? I love hearing different ideas, and I'm definitely not the only person that knows how to trade these markets. So let me know what you think as well. Okay, that's one way I'm looking at this for tomorrow. Now, also too, what would we do? What would we do if it ran lower and then jumped right back up? Because tomorrow's non-farm payrolls, right? I mean, that could easily happen. Could I go up top here and then find a new channel down low? Oh yes, that will be a fantastic short. Now, what's the problem here, right? What's the problem here? Momentum. Right? Whenever we rotate off the low like that, boy, these love to rip, right? And we'll talk about this on the oil here in a moment. What's the challenge? The challenge is momentum. Remember, there's a price you pay for a deep pullback. This is exactly where we can basically use that same game plan we just talked about on the S&P, right? 1, 2, back down, or again, retest that high, 1, 2, back down. Remember, don't forget too, these oftentimes will turn into channels as we go lower. And the market at this point now, right, will want to retest that low, look for that buyer failure off the high, look for that first test is the best test, and you better leave a runner back to that low at that point if we get it. And again, unfortunately, I don't have forever on these videos, right? So if they do hold that pullback and run this thing higher, that'll be a reversal. And again, this is why we have a trade room, right? I can't cover everything in these videos. The markets are always throwing curveballs at us. This is what I'd love to see for tomorrow, but hey, we're going to be there on the fly, and we'll make sure we adjust if we do get that reversal. So think about that as we go lower. So that covers kind of the shallow pull or the shallow breakout. Now, as we go lower, if we go lower, right, keep an eye out for a 1, 2, 3 breakout. We take out that low. We pull back to the moving average. We don't jam back up. No. The bears come in. They go, yes, we're taking out those big lows we mentioned before. They jump off that moving average. Remember, anytime we see a strong breakout, we don't sell that first pullback, right? As we talked about repeatedly last night, you have to get proof. And the proof is the holding that pullback. Once we see these 1, 2, 3 moves, we'll talk a lot about 1, 2, 3 moves in the trade room. I can mark off that low. I can mark off that high. And again, look left, find those prior swings. Prior swings are where traps live. Get above the moving average, right? Above that moving average. That's where buyer failures live. And again, trap, failure, pullback combo. Now, where is the target on a short like this, right? That first test off the high of that channel. Remember, anytime we have a breakout, it's the first leg. The breakout leg is the measuring leg. So we know how big that leg is. Once we pull back to the high of that channel, that's going to give me a really nice fine-tuned exit to maximize my profit. We know where the market really wants to go, that 10,596. But again, if all we get is a 1, 2, 3 move going lower, we find that channel. We short that first test with any of the entry patterns you guys are learning right now in the free trading class. And again, first leg, third leg will help us really fine tune where to take the bulk of that profit off for tomorrow. Another breakout pattern I love is called a pop and grind breakout. These are my favorite by far. These are really great. They're very easy too. We pop lower. We don't end up punching up. We don't pull back to the moving average and jump off the moving average. No, the market is so heavy in this example, in this situation, and we begin to grind and grind and grind. That's why I call it a pop and a grind going lower here. Anytime we see a pop and grind, it's pretty easy. We mark off that low. We find that channel up around those highs. Again, draw those channels backwards, as we always say. Drill down, find those prior swings, trap, failure, pullback combo. Pretty easy, right? First leg, third leg. That'll give you a good idea of that target there. We saw one of those this morning, right, on both the Nasdaq and the S&P. The next one here is a little more aggressive, right? Let's say, for example, we get a strong breakout going lower, right? Something happens, news comes out, ISM comes out, right? 10 o'clock tomorrow, I don't know. We see a real strong rip going lower. Anytime we see a strong move like this, we know we're going to probably get another leg, right? One of my favorite trades whenever the market's ripping either higher or lower is what I call a two-try trap. It's just like it sounds. Strong move, shallow pullback, lower low in price, and repeat after me, traps, baby. One of my favorite trades whenever we have a real fast-moving market. And you'll know that when you see it. You will. It'll really move. A lot of times, it'll break out and really rip going lower. Moving average comes down. The bears, of course, want to sell a deep pullback. All they get is a little tease, right? Barely pulls back to the 21. It makes that lower low. That trap is just begging to get sold. And of course, if you can, right, we'll connect those lows up around that high. Not required, but if I can combine the top of a channel there, that is a beautiful, beautiful short there. So keep an eye on that one as well, right? Kind of that pop and grind or that two-try breakout, as we call it. Make sense on that? Okay, lots of ways, and I could keep on talking about breakouts. There's a lot more ways we could trade it for tomorrow, but at least now we get kind of my favorites here on the video here tonight. And again, right, tomorrow morning, every morning in the trade room, we'll go over any other variations that we get because the markets are always throwing us some curveballs here. And again, if you got any questions on this stuff, let me know in the comment section below. But that's definitely what that's definitely what the Nasdaq is looking for here for tomorrow. Same thing on the S&P, right? S&P has some big support levels below. If they can crack below it, right, they got levels waiting underneath them. How about some oil right now? Boy, did we nail that oil, right? Oil, if you watched last night's video newsletter, classic on the oil last night, right? Big move down, multi-day pullback. I mean, come on, right? If you watched last night's video, you had an easy game plan for some money right now, or this morning. Now, over on the oil right now, it's kind of the same thing. A little variation here, right? It's basically a bear market. We're basically in a trading range right now, and you can see, right? Everything pops up. The bears are coming in to sell it short. The buyers were able to hold that low, as we talked about in last night's video. So a lot of this is the same idea, but you'll notice there's a little more stuff to worry about on this one, right? So for example, we know that the best trades in a bear market into a trading range are to short the pops, right? So if we go up, sell the high. If we go lower, right, we're selling that breakout going lower here. Now the one big difference on the oil here is that if we do go higher, what are some things that we can see that are going to be concerning? One is momentum, right? Because now we have all of that, what we call rotation off the low. Remember, when markets go below a range and then really rip going higher, oftentimes these things keep on going, right? Because there's such a strong momentum off the low. Now, again, we're pretty bearish overall right now, so it's probably not going to go forever. But it would make a lot of sense here, though, if the market goes higher right now. I've got some key levels. Really, that 76 level. If you look at like a 60-minute chart right now, there's a big trend line coming down off that big range we talked about. I'm not going to go into a lot of detail right now on that. It's not really necessary. There's a big trend line coming down here overhead. So it's going to be right below that 76. So as we go higher, I like the idea of shorting this, but momentum is a big concern here, right? And as we talked about in last night's video, anytime we get those really nice deep pullbacks, we want to let them try twice, right? Because again, again, the buyers are not going to roll over and play dead so easily, right? We wish they would sometimes, but we want to make sure we time the entry a little better off a 2-try rule. The second thing, and you probably can see this already, is this rising support trend line. Now, why is that a problem? Well, it's a problem because, think about it. If we get a pullback, 1, 2 right now, if I sell right into that, yeah, right? It's not exactly a great place to get short on this. So whenever I have an issue with selling into support or selling relatively low, we talked about this on the S&P earlier, what's the best entry? The best entry is a trap entry. So whenever I see a rising support trend line like this, you'll see a lot of rising support trend lines. I have to be careful. I don't want to sell right into it, but if I can get a nice short signal off that, right off what I call a crown reversal pattern, buyers once, buyers twice. We know where stops are, right? Same idea as the S&P, but we're not trying to short this thing right into that trend line. So the goal would be to get that trap high. One of my favorite tricks between you and me is I like to try a trend line off that low, up off that high. I mean, I can't think of any better entry than that. Right? Little hidden channel, little trap high, get the proper signal candle. And again, we'll talk about the proper signal candles in that free trading course, which, by the way, all the important links you guys need will be linked up in the description as well. So that's definitely on my radar there as we go higher, right? If we go higher here, overall bear bias, we're still pretty bullish in the short term though. So it's 1 try for the buyers, 2 try for the buyers. It's that trap high, because again, you want to sell as high as you can around that trend line. And then think about that trend line now. Oftentimes what happens is the market now will get that short, and then what it'll do is it'll break through, it'll pull back, and you get another entry off that trend line, right? Like a little breakout pullback off that trend line. So keep that in mind as we go. And again, as I've said repeatedly here, I don't have time to cover every possible scenario. If they hold that pullback and blast, that becomes a reversal. And we'll talk more about reversals, and we'll kind of go over that tomorrow morning in our trade room to keep this as simple as possible here for us here tonight. So trapping those buyers, literally trapping those buyers with a trap high on that, a bull trap entry, a crown reversal as we call it. And then of course that little breakout pullback there. Now a lot of times what will happen is you won't get that breakout pullback to come back to that trend line. So be aware of this. This is very common. A lot of times it'll pop and it'll start to grind down like this, right? There's a pop and grind. So grind it down, put it up, you get the point, right? So we may not get that trend line to get hit. Okay. The next best thing though is some sort of trap high. Why a trap high? As you can tell, I love traps because traps are going to get me in at kind of the highest available price, which is where all the smart money is, right? All the professionals who have learned this lesson, they don't want to sell it low, right? Because that kills their risk reward ratio. They want to sell it high, right? And that means traps, right? A bull trap above a prior swing. So keep those kind of variations in mind there as we go higher. And then as we go lower here, I'll tell you, it's very difficult right now to want to buy off this low because as it rotates lower, that's going to be a lot of momentum. The safest way to buy a market like this, again, because we're very, very bearish overall, would be to use those crown reversal patterns. So we take out that low, the bears try once, the bears try twice, we trap in those bears, we use that trap low. Why a trap low on this? Because remember, just like we talked with the Nasdaq, right? If we try to buy this thing as it goes higher, it's an overall bear market, and you better believe there'll probably be more bears coming in to pick your pocket. Right? So we have to be careful on that long side trade at the low when you've got these big bear biases. But you can definitely see plenty of support down below. If the bears come in, they try once, they try twice, grab that trap low down here. That's the way you want to buy it. And by the way, this pattern right here, these crown reversal patterns, this also applies to the S&P and the Nasdaq. It's not my favorite trade in the world because again, it's pretty bearish out there right now, but it's definitely a valid setup. Just make sure though, when you're trying to buy against a bear market like this, I don't care how good that support level is below you. You've got to be aware that as the market goes higher, you're going to have more bears coming in trying to eat your lunch, right? So make sure you're getting in as low as possible. That way, if they do come in and pick your pocket over the head there, you've already got some money out of that trade. Right? Does that make sense? Right? Once you learn that technique, I'll tell you, it's pretty easy to avoid losses, and avoiding losses is it's pretty important, right? It's more than half the battle as far as making money. And then, of course, as we go lower, these oftentimes turn into freight trains, right? Because you get all that momentum going lower here. So, as we go lower, if this thing kind of drops down, holds that pullback, blasts and runs lower, what do we call that? 1, 2, 3 breakout, 1, 2, 3 breakout. We go out, mark off that low, mark off that high. These are pretty easy, right? We short that first test. And then again, don't forget, right? First leg, third leg, that'll be a big objective. Where's our next objective? We talked about this last night as well. 70.08 is pretty much where this market wants to go. If we can get this thing to break out here for tomorrow, that'll be about a $4 move. It's a pretty good move here on oil. Not nearly as good as those $7 moves we were getting this time last year, but that's all right. So that's the 1, 2, 3 breakout. Or it pops and it grinds down, right? Grinds down. Oh my goodness, these are even easier. Mark off that low, mark off that high, all of that momentum right now. Anytime we see a strong move, what do we expect? A pullback and a retest of that level. We're not trying to pick the top on this. We mark off those highs. We wait for that pop up. We look for that nice juicy signal candle for the trap, right? Buyers come in, try to buy it for the failure into pullback combo. You got it. First leg, third leg as we go. And if all hell breaks loose, right? If the you-know-what hits the fan tomorrow, it rips lower here. Who knows, right? Rips lower, real strong, right? It'll be a panicky move here, right? It'll really, really rip lower. Strong move, shallow pullback. Lower low in price, traps, baby. Gotta love that 2-try trap, right, off that high, right? Remember, strong moves, while we retested, shallow pullback, lower low in price, all right? Remember, we don't want a higher low in price, right? A higher low is not what you want. You want that lower low in price because that creates a swing high. Only way to get that swing high is lower low in price. That's the way technical analysis works, and you'll learn all those fundamental tools in the intermediate classes here at School of Trade. So keep in mind on that as we get that breakout, if we get that breakout going lower. And just like on the NASDAQ, right, if we were to break down and kind of hang out here a little bit, I will certainly now be looking for new channels, right, popping back up, trapping those buyers in, just like we talked about there on the NASDAQ as well, right? So I really like that setup as well. Again, overall bearish. And as always, I'm sure the markets will throw some curveballs at us tomorrow between the non-farm payrolls and, of course, the ISM services. So that's exactly why we have a trade room to make sure, we're going to cover our favorite trades here tonight, but tomorrow we'll put the plan to work and we'll adjust to any changing conditions that may come a bit of a surprise tomorrow around that news here. All right, guys, that is a pretty good game plan for tomorrow. Don't spend all that money in one place this weekend. All right, guys, wrapping things up, all kidding aside though, thank you so much for tuning in and watching all the way to the end. If you're still watching this video right now, you are the person I do these lessons for every night. That means you're dedicated, committed to this, and I look forward to the day we can work together more as a student of mine in the trade room and as a new member of our trade room. So don't forget, any questions, don't be afraid to call the office. I'm always here. The easiest way to get help with anything, charts, data, brokers, membership, anything we talk about tonight, you can always call the office. We have live chat as well. I don't get to the comment section as quickly as I probably could. Again, if you have questions, something urgent, definitely don't be afraid to call the office. And again, I'll put all of the important membership links down in the description of the YouTube video. And I would love to hear from you too, right? Is my analysis wrong? Do you love it? Do you hate it? Give me some feedback in the comment section below. I always appreciate hearing from you guys. I always enjoy seeing different opinions on what you guys think should happen tomorrow as well. All right, guys, hope you guys learned a lot tonight. Hope you use this strategy to make a killing on Non-Farm Friday. Remember, be careful overnight. Be aware of those news reports tomorrow. And if I don't see you guys in the trade room, we'll come back next week, right? Do it again next week for the first kind of full week of trading of the brand new year. A very happy new year to you all. If this is the first time you've tuned in here tonight, grab that free class, right? Learn the setups, start making some money on those, and I'll see you sometime soon in the trade room as a brand new student. My name is Joseph. Thanks for tuning in. Be well out there. Be nice to each other. Enjoy the weekend. If I don't see you guys tomorrow, and you better be here next time. Adios, amigos. Bye-bye for now.